Welcome to Behind the Money, the show where we talk about some of the most interesting public companies and people. I'm your host, Norris Willie. Today, we're talking about if small cap stocks have returned and if a bull market is on its way. While watching Behind the Money, remember, this isn't financial advice and shouldn't be taken as financial advice. This is only for entertainment purposes only. Now, back to the video. Since the S&P jumped 9% in November, the benchmark index has tacked on a little over 3% since the start of December, soaring after the Federal Reserve indicated it was likely done raising interest rates. The Fed even forecasted 3 interest rate cuts in 2024 as it gets closer to achieving the soft landing it's been aiming for, meaning bringing down inflation without causing a recession. Large cap stocks dominated 2023 as the Magnificent Seven were all big winners this year. However, new bull markets, which we're on the verge of now, typically broaden as they mature, and that seems to be what's happening now. As investors prepare for rates to come down next year and grow confident that the economy will avoid a recession, small cap stocks are starting to beat the large cap stocks. Since the November lows, the Russell 2000 has beat out the SPY index by over 9%. The Russell 2000 comprises small cap stocks, so it tends to be more volatile than the S&P 500. However, that tends to work in investors' favors during times like these. The Russell 2000 has soared on 3 particular occasions. The first came on November 14th when the October inflation report came in cooler than expected, persuading investors that the Fed was unlikely to raise interest rates again. The Russell gained 5.4% during that session, as small caps are considered more sensitive to interest rates than the titans that make up the S&P 500. Smaller companies have less access to capital, often have weaker balance sheets, and are more likely to feel the impact of a recession, which could mean bankruptcy for some small caps. Lower interest rates therefore act as more of a lifeline for the sector, especially since many small caps aren't even profitable. By contrast, S&P 500 companies must have profitability on a generally accepted accounting principle, or GAAP, basis to gain admission to the index. Small caps surged again on December 1st when Fed Chair Jerome Powell gave dovish remarks at a conference, and again after the Fed's recent decision to hold interest rates steady and its forecast to cut them next year. All 3 times, the Russell 2000 easily beat the S&P 500. The small cap index also has a history of outperforming the S&P 500 during early stage bull markets, and that could especially be true this time, as it's still 20% below its peak compared to the S&P 500, which is near its all-time highs. As you can see, small caps still have a lot of ground to gain against their larger peers. Now, the best way for investors to capitalize on a likely rebound in small cap stocks is to buy shares of iShares Russell 2000 ETF, IWM, the largest index fund that tracks the Russell 2000. It's a popular investment with $54 billion in net assets, and an expense ratio is relatively small at 0.19%. This is a great start for anybody looking to invest in small or micro cap companies, and I got this information in this video idea from a Motley Fool article talking about the possible rebound in small and micro cap stocks in 2024. So I wanted to give you this information, but in 2024, Behind the Money is going to be starting to focus more on small and micro cap companies. So this was just a good video to start the new year on. So as we get ready for the new year, I will see you then, and thank you for watching Behind the Money.